Rach used a term, Macquarie moves the canary in the coal mine, and a lot of people listening in might be thinking, what the hell does that mean? So first of all, Rach, can you kick off with that?
Yeah, well, the big change that happened in the market on Friday was that Macquarie Bank, who's now Australia's fifth largest lender, they're also the lender that most brokers would turn to for this trust strategy.
A CBA, the first four?
Yeah.
And again, the quality control thing, you should date stamp when you're recording this.
Yes, date stamp. So we're recording this on, what day
Friday
is it?
the 5th. Oh, Wednesday
November
the 5th of November.
November the 5th, and Macquarie pulled out of trust lending on the 31st of October. So that's for all trust and companies. They've just said, if you've got a property in a trust or a company, we're not interested in lending to you. They were also probably the number one lender doing that kind of work, but it kind of changed recently, and you know about this. It changed because a lot of people were using trust strategy for this borrowing capacity thing.
Yeah,
and we've talked about this on the podcast.
We have, and we've been skeptics of this because essentially it was brought in to basically try and increase someone's servicing or keep their servicing by siloing it into a trust. So we'd make that purchase in a trust as long as the accountant said, yeah, look, the income meets the expenses, we're all good with that, right? So now we can continue borrowing on in our personal name and the servicing doesn't change, essentially is what they were trying to do, right?
100%. And I think when you're buying a property in a trust or a company for your overall strategy, it can be a great idea. But when things like all these policies, when they catch on and there's property spruikers and people jumping on and pushing people to do something for a particular reason where this niche is just for servicing.
Yeah.
And I was just looking this morning at my ads, and one of them, it was a property spruiker, and this was what the ad says. It says, how to stack properties without hitting debt limits.
There you go.
So, you know,
Use a trust or a company.
Yeah, so when
so
stuff
they need
like
to
that,
pull that down.
Yeah, so obviously they're getting a certain type of business. Macquarie have gone, wow, there's thousands of applications of these trusts.
Yeah.
This could be high risk. And they just went, bang, we're out. And I'm calling this, and I said it in our meeting yesterday in the office, this could be the canary in the coal mine. And everyone looked at me and they didn't know what that meant.
Yeah. Okay, so quickly explain that, first of all, so that all our listeners are clear.
So when there was coal mining back in the olden days, when the canary was to die, they would go, well, that's when oxygen is running out. So all the coal miners knew to get out. Yeah. So the canary in the coal mine is a little sneak of something before something big is going to come. So when we say the canary in the coal mine, we go, that's what I do with my old language.
If you were born before 1985, you get it. Otherwise, it needs to be explained.
Question. You said Macquarie's the fifth largest lender. Now I did hear that as well. Do the other four do trusts and companies?
Yeah, they do trust and companies, but not as well with this niche policy, which this niche policy that everyone's going for is, I want to be able to get an accountant's letter that says that trust looks after itself, washes its own face, and then I can just keep on borrowing endlessly. So there's other banks that do trust and company borrowing, but do they do it as with that same niche?
Fast and loose.
Well, are they fast and loose? Maybe not.
Yeah.
So you know, you guys are in the property world. I see that as more of a commercial play that if they just stopped doing it, they could have just said, we just want some more scrutiny. I actually think it's a play that Macquarie just want to go after homes and volume, and because their service turnaround is fantastic, right?
It is.
Now, it gets complex and slow real fast when you're doing that type of lending.
Yeah.
So I think it's could be a lot of that commercial decision as well.
Yeah, but we see this I've seen this a number of times, and it always goes on when people jump on a bandwagon of a niche policy, the bank will go and pull it back, but they pull it back further. So I'm going to go back to the olden days of 2007 and it was Westpac that did low doc lending, and you didn't need an ABN.
No.
It was so loose, this low doc lending, but when they got a high risk book for that, they didn't just pull out of low doc, they pulled out of all self-employed.
Yeah. It's the same as the super fund lending. Everyone was onto it.
That was the next
while
one.
They're onto it, and then it just got too hard, too annoying.
Coincidentally, the Westpac thing was also an accountant's letter, wasn't it? So
They didn't even need an accountant's letter.
It was even, yeah,
It was
okay, so another level up.
self-certification back in the wild west.
Unbelievable. Yeah, and I think it transgressed to that. But so I think it's and we don't want to say we told you so, but we sort of did. It's like, well, okay, if you're going down that path, just understand that things can change and don't take your eye off what you're actually doing it for. And I think it's like, okay, if we want to buy multiple properties, that's great. But if we buy well, we can continue to buy properties generally anyway. We just got to be wary of what the yield's doing and the cash flow, because essentially our servicing is compromised.
And
there.
it's probably important to say that they're not going to recall loans that are already on commercial.
No.
Like in companies or trusts. They're
Absolutely
just not writing new loans.
Nothing's been grandfathered. They've just come down hard and fast and said no more company or trust lending because they saw that as a risk. And I guess the big thing is to know that these things change. So we have a lot of trust and company borrowers, and a lot of people are doing it really well and for the right reasons. I always just say to not pick your strategy around a niche policy, and this is a perfect example of why not to do that.
And the problem is for those who are out there that have done that is you're doing it with the view of that second property, not this property.
That's right.
So now this second property might not be possible anyway because of what we've done in the first place, because now this policy's taken.
That's right.
Unless there's other lenders out there that'll still do it.
There's still a lender that's doing it with the letter. I cannot imagine once they get all of that flow through, it's not going to be too long before they go, we're the only one.
Yeah.
That's our risk and we're out,
which
happens in a lot.
Yeah, and this is probably for the listeners, me not being a property guy or gal, are we saying, because in the ordinary course of business, usually a business owner would have a company or trust structure, an entity structure, right? And so I've got a family trust, I can buy units in another trust and all that set up. So if I wanted to buy a property in my trust tomorrow, set up, good to go. And because I just brought up an article here about, they call it the loophole lending, they're stopping. So mum and dad, there could be employees, school teachers, nurses, or whatever. They were going to these spruikers, you're saying, and they go, set up a company, not because you need it to trade or you brought a estate planning or entity structures, literally just because we can get you more debt.
It's almost like a bucket.
How to just keep borrowing without worrying about serviceability caps. What could possibly go wrong? And you see when people catch on to a niche policy like that, we use that policy a lot, by the way, and we used it and it was great for our clients, but probably not for people that were debt stacking, trying to avoid serviceability.
Well, and the other risk for these people is trying to find neutrally geared property right now is harder. So have they actually got neutrally geared property right now according to the law of what the accountants said they have? I don't know, because there's a good chance they wouldn't have. So in a trust structure, that makes it very, I suppose, compromised in terms of their day-to-day cash runnings.
Yeah, that's right. And you'll still be able to borrow in a company or a trust. It just may have a little bit more rules around it, and it'll probably go to the major banks that are a little bit more, cautious with that kind of lending.
On the 1st of July 26, the stronger counterterrorism, AML, anti-money laundering regulations are coming in. So it will just be more work to actually, process all this.
Yeah,
so this is the crazy thing, right? So I've got the discretionary trust and my trading company. So the trading company is owned by my discretionary trust. And you'll see this more and more every couple of years, and I've just had it with ANZ. They've emailed me and said, you need to provide new ID for all beneficial holders of your trust and company. Now, I didn't have to do that 10 years ago. I was in London at the time and I forgot about it. They froze my trust bank account until I provided and the reason why, this goes back to broader estate planning. My family trust, the actual principal controls of that are my mum, my dad, and my sister. So I don't control my family trust. My parents and my sister does, and that was for asset protection purposes. So what I had to do was get Mum, Dad, and Lauren AML'd with ANZ. Lauren wasn't an ANZ customer. She had to go into the branch.
Yeah.
So I did that for the Simo podcast business, like far out. And then 10 minutes later, like 2 months later, I'm in Europe. They send the email about the trust. Do the same thing. I'm like, well, if it's good enough for that entity that's got the same, both banks with, like, it was just a nightmare. And it's to the point now where I think I'm going to have to, just for the ease of paperwork, just remove them as the principals, and I'll just be the principal because I carry less risk now. But all that to say, yeah, this landscape of counterterrorism and money laundering is a factor.
Yeah.
Because you remember CBA got smacked for their ATM money laundering stuff. So
Yeah. No, it's just something to be aware of. But again, when we're making these key decisions, because we can't go and buy property one day and then change the entity to the next without impacting our bottom line. It's going to cost a lot of money to change the entity if you wanted to do that. So,
but these property spruikers, the winner is the property spruiker because they're getting a clip on the commission of probably the brand new property.
100%.
The borrower is resetting, you're going, if it was the first or the second property, your land tax starts at 0. Like it's just, anyway.
Yeah, I think it was a lot of companies that were preaching multiple property portfolio strategies too. So that's obviously, that's any case, interesting stuff.